Hey everyone, welcome back to Investing Ethos. This video is an update on Janison and the crazy things that has happened to this company since my last valuation. So what has happened? There has been a lot of things that have happened, and I would like to dedicate this video regarding all the changes. But before we start, I want to put a disclaimer out there that this is general advice. This is not personal financial advice. Just to let you guys know, personal financial advice means me understanding your financial situations and giving you recommendations on what to do with financial information. That is not what this channel is about. This channel is very much about an educational in nature, explaining my thought process on certain companies, but I am not taking your personal financial position into consideration when I'm doing this. So that's why my advice will be very much a general nature, which is anyone is allowed to do general advice. Unless you're a financial advisor, you're not allowed to give personal financial advice. So my channel have been about my thesis on why I believe Janison is a great company to invest, and why I believe that this company provides a lot of strong tailwinds, and they have been able to execute on the business, and why the valuation is low. That's based on my assumptions and my point of view, but I'm not making a call on your financial situation. So that's why that please keep in mind that this is general advice, and if you really want to have personal financial advice, I recommend you speak to a personal financial advisor who is licensed to give you that. What the hell just happened? Well, what happened is, since my valuation on the 4th of November 2020 at 36 cents, I valued the business at 80 cents, and the stock went up from 36 to 70 cents. So I got this right on the money, but I didn't predict some of the catalysts would come so quickly. So that's what I want to discuss in this video, that even though I got this valuation right in November 4th, 2020, there's a lot of things that have happened that have forced me to rethink my valuation. So in terms of a portfolio-wise, I remember how I started with $1,000 that I decided to put into this portfolio. Remember, this is virtual money, and I put in 2,540 shares by myself at a price of, I think, 36 cents or something like that. The capital gains is 75% for the portfolio, so we've done pretty well so far. It's just a snapshot to see how I can improve the portfolio, because remember, we started with $10,000 of virtual money, and I want to act like a fund manager and see how we can grow this portfolio. Even though it's only 10% of the weighting, it's doing pretty well. Maybe I should put up more in hindsight, but in saying that, this is all for just to measure the performance. So how did this happen? Well, in my valuation, I did take into consideration that Janison did that acquisition with Education Assessment from UNSW Global, which I think was one of the best acquisitions that they've done. They only spent about $1 million, I think, or like $750,000, and they managed to get $4.8 million in revenues, which I think is a fantastic return. I think one of the best acquisitions I've ever seen. If you think about it, they guided for $3.5 million in September, but they ended up doing 4.8. So that's a massive revenue beat. Also, the gross margins of that is insane. It's 80% gross margins. So which means that whenever they do this exam, the ICAS exam, they're getting most of the money back, which is fantastic. So all they need to do is grow revenues, and the gross margins will take care of itself. They have highlighted that they want to do 15 to 16 million in the first half of financial year 2021, and we'll see how that pans out. But I believe they're going to do very, very well. In saying that, they also want a couple more contracts. First, for Chartered Accountant. That exam is now digital, so the CA exam that everyone knows is going to be giving them $5 million in total contracted value. as well as they have also successfully delivered the New South Wales Department of Education check-in test, which is a test to see how COVID-19 impacted a lot of students' learning, which is a really important test for the government because the government wants to see how much of an impact COVID-19 had on the kids, like had on children's education, and this test is a way to determine how the learning of your students. So, as Janison has deep ties with the government, especially with New South Wales Department of Education, this is a fantastic test for them to administer. Also, D2L and Brightspace integration is also going really, really smoothly. The sales pipeline is strong, and as Janison is the national service provider in America, therefore they can get more money if they can deliver on the integration, as well as with education, as well as schools in the education system in America. But the major news was in March 2021, where Janison became the national service provider for Australia. Due to the OECD contract, they have managed to get not only Australia, but also China, which is a recent announcement and has really made Janison what I feel one of the most undervalued companies in Australia. Being Australia being the national service provider means Janison can earn $7,000 per school, which is fantastic. That is high margin revenues coming in. And because they also acquired ICAS, half of the schools can automatically do the OECD PISA-based test for schools exam, which means that they can get around about $10 million in Australia just from that one exam alone, which is fantastic, which is nearly half of the revenues of 2020. So in saying that, what you're really starting to see is that Janison is no longer going after the small schools, they're going after the large countries. And when they're expanding globally, that attracts more revenues and more revenue streams. So has the thesis changed? The answer is nope. It has not changed. In fact, the company has outperformed my thesis, and I have to rethink what my thesis is. The company is going from strength to strength, as you see on the right. It's like the little pillars like were before, and now they're turning into massive pillars. And we're at the inflection point of their growth cycle, and I think they're going to do really, really great. My previous assumptions assume that the company will get about $150 million in revenues in 2030, and the sales to cap of 1.5 and operating margin of 15%. Those were my early assumptions, and I was very conservative with these assumptions, as you saw with my bull and bear case. Now I feel like $150 million in 2030, that probably might happen in 2026 or 2027. But in 2025, I feel like $120 million makes a lot more sense. So my previous assumptions gave me a valuation of 80 cents. My current assumption is giving me a valuation of $3.14. So it's a massive beat on my assumptions. And I have to rethink about my assumptions, and this is what I've got. No longer you're going to get $150 million in 2030. I believe $120 million in 2025 is realistically possible for Janison, which is insane, which means that the company is going to grow really, really rapidly. And also, the sales to cap ratio has gone up from 1.5 to 2.5, which means the business is getting more and more efficient. And furthermore, the operating margins is insane. It went from 10% to 25%, which is near the Microsoft to Apple level margins, which is insane, which means that the company is very capital efficient in growing the business. And the perpetual growth rate of 3% means that they're growing in line of GDP, which is correct, which I believe they can, or they can even exceed that, but that's being very dangerous with my perpetual growth rate. But altogether, even with these assumptions, gives me a $3.14 price target. And if we go back, the price target before was 79 cents. So I'm thinking 4 or 5 bags from here, without, as now my bull case and what they can theoretically hit based on the recent announcements. Furthermore, I've also announced in my previous valuation some of the catalysts to keep an eye on, and they've succeeded in meeting catalyst number 1 and catalyst number 3. They've increased revenue for OECD contract by being a national service provider and getting Australia and China on board. So now they have 9 countries that are doing it. And number 3 is cross-selling the ICAS exam, which is exactly what they're going to do next. So they've done the ICAS exam for numerical-based exams, so like mathematics and science, but they're also going to add in English. So when you add in another type of exam, that's another revenue potential stream. And this is just very easy for Janison to do. They could just add in new subjects and create new exams, and lo and behold, their revenue is going to go crazy if a lot of customers, in this case parents as well as schools, decides to have their child do those exams, which is what they're going to have to do in order for the kid to get into good schools, in order for schools to measure their education compared with other schools. So I feel like this company is going to be part of global education systems. And by being a winner of the OECD contract, I feel my bull case is getting stronger and stronger every day. But they haven't done number 2 yet, which is the channel partners. They haven't really updated on how they're going with Benesi and D2L. I mean, they did explain D2L that they're doing an integration, but they haven't really talked about Benesi because that was a big announcement with Benesi they're doing the Janison, they're doing the Janison exam for Japan. So we wait to see on what number 2 is going to be like, but they've absolutely smashed number 1 and number 3. And with these latest announcements, I feel like the company is undervalued from my assumptions. Remember, I'm not taking your financial consideration, but based on my valuation and based on what I think about the business now, the company has shoot the lights out in terms of winning more countries and getting more customers into the platform, that I feel like the current valuation was undershooting the revenue potential and the growth potential of this business. And even now in the share market, I feel like the market is undervaluing this business. So I want to end it here. This is basically my new forecast, what I really believe in this company, and I will provide more updates into this, or based on certain things that happens throughout the company's business life cycle. And with this latest announcement, I would have to really rethink about my portfolio, and we'll make updates on that as well. But thank you so much for listening. Listen, and I look forward to seeing what you guys think.